Welcome to this week's Forex forecast for the week ending February 24th, 2023. My name is Justin Bennett with Daily Price Action, and in today's video, we are going to talk about the Euro USD, the pound, the dollar versus the yen, the dollar versus the Canadian dollar, and also the Australian dollar. So before we get into this, if you guys did miss last week's video, I recently launched a free swing trading course that you can pick up on the website. So see the link in the description here if you're on YouTube, because that link will take you right to the page, gives you instant access, and it is 100% free. So let's go ahead and get into the charts here. Looking at the Euro USD first. Now, this market is giving us some mixed signals because on the one hand, we have the market holding above support, and on the other, it did break below a significant trend line, and it's also holding below a significant horizontal level. So if you saw last week's video, we looked at this area right around 1.062. And the reason for this is you can see this is right in the middle of this consolidation that we saw from the Euro USD back here. And sure enough, that's exactly where we saw Friday bounce. Now, a lot of people might look at this and say, this is a bullish pin bar, which means the Euro USD is about to rally. However, there are a couple things that are a bit concerning for me in regard to that. The first one is the fact that the Euro USD is holding below this trend line from November. So you can see that going back here, we've got several touches off of this level, and the Euro USD broke below it last week. Okay, so you can see here that on Wednesday, we got the close below, Thursday held below it, and Friday also closed below it. Okay, it was marginal, but still closed below that level. So what this means is that we've now had 3 daily closes below this trend line up here. Okay, now the second reason that I don't love this candle right here is, in fact, really, there's 3 reasons. The second reason is that this was a Friday candle. And as I've said before, you have to be careful with Friday breaks or Friday signals because of the lower volume that you get in the market. Okay. Now, the third reason is the fact that the market right now is just very sideways. Okay. The euro for the past couple of weeks has been very sideways, and this is no exception. So whenever you get a candle like this within congestion, okay, it's a lot less reliable than if you get something at the bottom of a swing. So if this candle on Friday had occurred over here, okay, it would be a lot more reliable than it is right now just because the euro has been so sideways. So to me, this candle right here, okay, it could work out, but to me, this is really a no-go for a buy signal. And furthermore, if you look back here, all the way back to last year, you can see that this pivot, okay, right around 1.078 is very significant for the Euro USD. And so far, we got the drop below it, and it's serving as resistance right now. So to me, as long as the Euro USD is below that mark, this is really not a buy for me. Now, if we were to see a reclaim on the higher time frames, then that could be different. Okay, if we see a reclaim up here of this trend line and then also 1.078, then that would change my mind because it probably means the euro is about to rally up here towards some of these levels. But until that time, this up here is going to be key resistance for the euro. Now, looking at the downside, the market has to get below 1.062 on a daily closing basis to open up that next region right around 1.048. All right, so really not a whole lot to do here for the Euro USD, just because, like I said, the market has been so sideways. So speaking of sideways, the pound is another market that has just been sideways here ever since November. So you can see that we got the break above this level right around 1.1915. And ever since that time, this has just been one big range for the pound. Okay, so technically it's still within this range with some more minor levels along the way, including 1.213 and also 1.23 or so. Okay, now this level up here, you can see this has been a pivot for this pair for quite some time. However, we got the close above it, and you can even see what happened. Okay, on Monday, we got the close above. And I pointed this out to members in Discord, and at the same time I said that the euro was likely to rally. We got a very brief rally. The market held above it, okay, for a couple of days, and then we got the reversal. So even if we see the pound rally this week, you're going to have to keep a very close eye on 1.213 just because this was a failed move, okay? So that means that this area is going to be resistance for the pound. Now, if it were to get back above that on the daily chart, then we might have something here toward, 1.23 or so, but that is going to be key resistance for the week ahead. Now, for the pound, if we were to see a close below this level right around 1.1915, then that would open up lower levels like 1.1635. All right, so you can see that back here, very clear level for the pound if we were to get a breakdown from this range low. But keep in mind this is going to be a very significant support for the pound, just given the fact that the market has traded within this range for the past few months. So next up, we have the dollar versus the Japanese yen. And this is a market that, to me, has some of the cleanest technicals in the Forex market right now and has for quite some time. So we saw the breakout from this descending channel, which I've talked about at length on the blog. And we got the breakout here on February 3rd. Okay, we got the retest of support down here. And sure enough, we got the rally. Now, you can even see where if you watched last week's video, I said that a close above this level, okay, this high back here, this one right through here, right around 132.90, a close above that would expose 134.40. So we got the close right here on Tuesday. You can see we got the retest on Wednesday right here. And then we got the move up toward 134.40 during the later part of the week. Okay. Now the dollar yen right now is holding below 134.40, which is a significant pivot for the pair. So you can see support, we got the breakdown, resistance. And sure enough, same thing here. Over the last 3 days, the dollar yen has been unable to break that. Okay, so if we do see a rotation lower, once again, 132.90, this is going to be the support to keep an eye on. Really, this is kind of a must hold for bulls. You wouldn't want to see it give up this on a daily closing basis and expose 130.60, just because that would kind of invalidate the uptrend, or at least start to. So in my mind, this is kind of a must hold for bulls going forward, right around 132.90 or so. But the market is going to have to get above 134.40, like I said on Friday, in order to expose the next key resistance for the dollar yen, which comes in right around 138. All right, so very similar to 134.40. You can see this pivot right through here. If you look at 138, same thing for the dollar yen. Okay, it was a pivot back here several months ago, so that would be the next key resistance. But first, the dollar yen has to get above 134.40 on a daily closing basis. So next, let's talk about the dollar versus the Canadian dollar. And I've mentioned this pattern a few times on the blog, and I absolutely love it just because it is so incredibly simple. And this lower level is very deceiving because it does go all the way back here to July of 2021. So you can see that for a very long time, this level served as resistance for the dollar CAD. All right, now we got the breakout back here in September of last year. The market went on a crazy rally all the way up here toward 139, and then we got the pullback. Now, since that time, we have had a triangle pattern develop for the dollar CAD. And you can see how the market is just kind of getting squeezed within this terminal pattern. Now, terminal meaning that this has to break out eventually, okay? Because these two levels are going to come together into what's called an apex. And eventually, the dollar CAD is going to have to make a decision and either break higher from this or break lower. Now, when we look at this in context of, the last few years, okay, going all the way back to, let's say 2015, 2016, I've talked about this as well. You can see where right now the dollar CAD is coming off of this multi-year support. Okay, so it's coming off of the support level. We've got the uptrend intact. So technically, this right here, this consolidation could be a bullish continuation pattern. Now, what's key for that though is a close above that trend line that I just showed you. Okay, so as of right now, there is no decision here for the dollar CAD, but just given the fact that the market is coming off of this multi-year support and also the fact that it is in an uptrend right now, I would be looking for a close above resistance more so than a close below support. So what I'd be looking for here, okay, on the daily time frame is a close above this level right up here, right around like 1.353 or so. All right, this is going to be the key for the dollar CAD to close above this and then expose higher levels, like potentially these swing highs back here right around like 137. But I do think if we got that breakout, we'd probably be looking at these closing prices right around 139, especially because that is such a significant pivot for the dollar CAD. You can see that if we go to the daily time frame here, go all the way back to the consolidation from back in 2020, you can see that this area was support for the dollar CAD. And if we fast forward, that was obviously the closing price. Okay, the daily time frame closing price all the way back here in October of last year. Okay, so a very significant level if we were to get the breakout. And the objective of this points even higher, but we'll talk about that in a later video if we do get the confirmed break from the dollar CAD. But once again, I just have to stress that right now there is no decision here. We do need a break either above resistance up here or below support. So lastly, let's talk about the Australian dollar, which like the Euro USD is showing some indecision here. I talked about this one last week. Now we got the close below the bottom of this equidistant channel. So you can see that off of these two highs, we do have a parallel level that touches off of several lows recently. All right, so we got the close below this on Thursday. The market barely held above it on Wednesday. We got the close below on Thursday, and Friday also closed below it. Okay, so going forward, this is going to be your resistance level right up here around 69.20, maybe 69.30 or so. And for the Australian dollar, the 687 level is key support. So this horizontal is going to be key support on a daily closing basis. This is also the one I talked about. And this is why it is critical, guys, to wait for a daily break below these levels, because anybody trying to short this on Friday likely had to get out for a loss before the weekend, because we never did get a daily close below that. All right, so Friday held above it, once again. And like the euro, you might look at this and say, well, we've got this long lower wick, so it means the Australian dollar is going to rally. However, once again, this area up here, just like the euro, is going to be resistance. So the Australian dollar would have to reclaim this, okay, on a daily closing basis, close back up here in order to reclaim that and expose higher levels like 70.30 and potentially 71.30. But as of right now, just like the euro, I do have some reservations about this. First of all, like I said, it's below resistance up here. And the second thing is that, like the euro too, the Australian dollar has been very sideways, okay? So that makes a candle like Friday's much less reliable. All right, so in summary here, for the Australian dollar, it's going to have to close below 68.70 on a daily closing basis, get below this level on the daily close in order to expose lower levels like 66.40. And alternatively, like I said, if it does reclaim this level up here, get a daily close above this area, then we are potentially looking at a rally from the Australian dollar. But as of right now, this area right around 69.20 to 69.30 is going to be key resistance. All right, so that's it for today's video. I hope it helped. If you did find it helpful, be sure to like the video and subscribe to the channel for more content like this. And once again, if you didn't pick up your free swing trading course, be sure to see the link in the description. Or if you're on the website here, go over to the free course section at the top of the website, and you'll see the option to sign up for the free course. I hope everyone has a great weekend, and I will see you on the blog on Monday.